You remember what we were doing in the last class?
We were doing, what was the topic's name? Oh yeah, we were doing income and wealth inequality, right? Addressing income and wealth inequality.
Yes, so we talked about the minimum wage rate. We made the graph and we
Yeah.
explained it, right?
Yes, sir.
So the next thing is about the transfer payment. So this area over that we have here,
Yes, sir.
we are going to use this area for writing the advantages and disadvantages of the transfer payments. But
All
first,
right.
we have to define the transfer payment. So the definition is coming afterwards. So just with me. You can
Yes.
write the definition first here, and then we'll go to the advantages and disadvantages. So,
All right.
what are transfer payments, Eva?
Um, okay, if I had to explain it, it's basically government uses some of the tax revenue for social benefits, like for example, pensions for old people who are retired,
Hmm.
unemployment benefits for people who don't have jobs. Um, then what else comes in extra payments? There's pensions. Um, there was one other thing.
Yes, what you're saying?
There was one other thing. There was unemployment benefits, pensions, and
Housing allowances, food coupons,
oh yeah,
child
yeah,
benefits,
yes, yeah, all of that too. Yeah,
right? So
yeah,
there are a lot of things that can come into the transfer payment. So these are the payments from tax revenue
yeah.
received by certain members of community. Recipients include elderly, disabled, unemployed, right?
Yes, sir.
For example, old age pension, unemployment benefit, housing allowance, food coupons, and
Child
child
benefits.
benefits. Okay, you can write this, then we'll talk about the advantages and disadvantages.
Okay, sir, I'm done.
Okay, great. So now, what are the advantages of transfer payments?
So the number one thing I feel like it can help in increasing the living standards of these people. Like for example, retired people, unemployed people can't really afford services and products and stuff. But if government is giving them this, I feel like they can at least afford all the essential goods for
Hmm.
living. So it can help in increasing their living standards basically. And then number two, again, I feel like it can have more equal distribution of income because even though they themselves not getting something, the government is giving them kind of an income. so they can afford goods basically. Then number
Mm.
three, um, yeah, another advantage. I feel like maybe it can help them get a like actually it's not advantage. Never mind. Um, trying to think of something else. Mm,
I guess this is these are the major things that you have talked about. Like reduces the poverty.
yes, sir. Yeah, this is problem.
It improves the living standard,
Yeah.
and it also makes distribution of income
More equal.
more equitable,
Yes, sir.
right?
Yeah.
So drawbacks.
Okay, so the first drawback is again the opportunity cost after when you spend that tax revenue elsewhere. Number two is that I feel like if people have that thinking process that they're gonna get this despite, like for example, the unemployed, they're going to basically start being very again complacent. They won't even try to find a job. They'll be
Mhm.
very dependent on the government for the income. So it can make maybe in some ways the GDP of the country go down because maybe that person is required in a company somewhere. Their position is required in a company somewhere, but they don't want to take that job.
Mhm. Right. So first thing, as you have also mentioned, it is a disincentive to work, right? Disincentive to work in case of especially the unemployment benefit. Not in the case of pensions, obviously, because now the person is not
Retired.
obviously he cannot work now, he is retired, right?
Yes, sir.
Then reduced output,
Yes, sir. Yes.
then poverty trap. What does this mean? Poverty
Um,
trap.
Poverty trap. Okay. Um, Maybe it just means that actually I'm not sure how to describe it. Maybe the unemployed people are going to be in this trap of transfer payments, and because they won't be finding jobs, maybe they'll still have poverty if the transfer payments ever get taken away.
Mm.
Is that what it means? I'm not sure.
Poverty trap is, you know, additional income will be taken away in taxes, no? So those people who are working, they, there is disincentive for them to work because of this higher taxes being paid by them. So they might also, take up less jobs, meaning as additional income will be taken away in taxes. So incentive take up jobs reduces. Lastly, increase in wage is going to cause inflation, isn't it? Yes, Ella.
Yes, sir. Sorry, the internet got disconnected.
No problem. No problem. Okay, so I was saying the poverty trap is additional income which will be taken away in the form of the taxes, na?
Yes, sir.
Because the incentive to take up the jobs will be reduced now for the people because they are paying a lot of money from their income in the taxes.
Yes, sir. Makes sense. Yeah.
And increasing wages also, or the money that the people will receive, will also result in inflation,
Yeah.
even through the transfer payments.
Yes, sir.
So we are done with this part. Now we are coming to the types of taxes.
Yes, sir.
Yes, progressive.
Okay, so income tax is basically the taxes like those who are high income earners will be charged a higher percentage of tax compared to people who are low income earners. So it's like the higher income you get, the higher tax will be charged.
Mhm. So higher the income, higher the rate of tax to be paid.
Yes, sir.
Inheritance tax.
Inheritance tax is basically, I think it's charged on a property that you have inherited from somebody and you have to like pay to, it's like I feel like, wait, I read this somewhere, when you're like signing the papers to inherit that, like that something, basically you have to pay a tax with it as well. When you sign with that, you also have to pay a tax on what you're inheriting.
Hmm.
I'm not
Right,
sure
this
about
is
this tax.
fine. Yes, yes, this is imposed on the wealth that you acquire, no?
Yes, sir. Yeah.
Tax is imposed when an individual acquire amount of wealth. Right.
Yes, sir.
Now the capital tax.
Capital tax. I think this is the one that was charged on. What was it? The capital. This was also something um like you have a specific asset, and for that you're getting taxed and charged. I don't remember the exact definition of this.
But this is right.
Capital tax.
This is the tax
Okay.
payable on financial gain a person may have made in time that an asset such as property or any financial portfolio has been owned, right?
Yes, sir.
Okay, so state provision of the essential goods and services. So government basically providing the goods and services often for free,
Yes, sir.
right?
Yeah.
So government providing goods and services often free of charge
Yes, sir.
to users, and services are financed through
Tax system. Yeah.
tax system. For example, healthcare,
Education.
yeah, most of the times in the developed world, the primary
Yes,
education
sir.
is for free. But what is the drawback of this?
The drawback.
Of government providing all of this?
Okay, oh yeah, that the government can be inefficient. They don't have that incentive like how private firms have to reduce their costs and then be innovative, have good quality, because they know that they're providing something which people like need. So they don't have an option. They will just come to the government and then take it, no matter the quality, no matter like every other type of like bad thing with the product, basically. So they can be inefficient, so they can have like they can use the resources in a bad allocation, basically they're not having the best allocation of resources. And then
Mhm.
number three, it's like if there's a small group of people from the entire population who want a specific product, the government might not provide to them because they're a very small percentage compared to the entire other population's needs. So they might only provide to like the mass number of people their needs. They might make products only for those needs, basically. Um, and then what else is there? They yeah, basically the point is that they can't um respond to your specific demands, basically, like how private firms do.
Mm.
They will just provide the things which they think by themselves are needed by the people the most. Um, Also, I feel like
And mhm, go on.
even though the government provides it in the long run, I feel like at some point, if they keep having the inefficient um, allocation of resources, like they might have scarcity at some point, like really bad scarcity of
Mm,
resources.
mm. And one more thing is there that more pressure on those working
Yeah, exactly. Yes,
because they
because
have
of the
to,
higher tax.
pay the taxes.
Yeah, yeah, yeah. Makes sense. Yeah.
Mm. So more pressure on those working,
Because they might probably charge like higher taxes.
yes, and paying taxes. Right.
Yes, sir.
Okay, great. So here we are done with section three. So microeconomics is done.
Okay, that's good. Good, good, good. Now the hard part starts.
Well, this is, something very, some people believe that micro is more difficult than macro.
Really? Oh God.
Yes. Sometimes, well, if I talk about when I was studying, so I always like macro more than micro because micro seems to be more, seems to be more dry in a way that, in macro you are talking about the economy from a larger aspect
Right.
where
Yeah,
you
that
are
makes sense.
talking about the country,
Yeah,
the
yeah.
policy
Mm.
making and everything. So
Yeah.
the way we will be, dealing with the macro policies now,
Yes,
I
sir.
hope your interest will probably develop more in the macro when we'll do that. Inshallah, inshallah.
Inshallah, yeah.
Okay, so have you been doing the MCQs?
MCQs, yeah, I did. I have been. But the thing
Hmm.
is now, okay, yeah, today we finished micro. So I'm going to be going home and then starting past papers like how you told me to. And I'll do MCQs also if I find topical MCQs. Yeah, they all are here. I'll just do all of these. I'll try to finish them all and then show it to you.
Perfect, perfect. And now you can easily do section B of paper two,
Exactly.
right?
Yes, sir.
Which is that when the questions, so the both the questions are from the micro, so 8 and 12 markers, those you can easily do there, right?
Yes, sir.
Have we talked about how to do a 12 marker?
12 marker, yes. I have done one and you corrected it and yeah, you told me basically the things I was missing. You did tell me.
Okay.
Yeah.
Okay, then that's fine. That's fine then. Okay. So now we will be moving on to our next topic. That is the macroeconomy 4.1 national income statistics. Right.
Yes, sir.
So first, the very basic things that we will be talking about. What is the national income?
National income is the total output that is produced by the economy. Um, how do I say this more?
Yeah,
Okay,
this is fine.
it's fine.
Total output or income
Yeah.
earned within a country. That's it.
Yes, sir. Yeah.
Now, key concepts of national income.
Yes, sir.
The first is the GDP.
Yeah.
What is a GDP?
Okay. I'm really bad at this chapter, but I'll try. Okay. So the gross domestic product is basically the output that economy, that domestic economy has. Um, it's basically products which they're producing in that specific economy. How much output, how much income they're getting out of that. Um, what else can I add to it?
Okay, when you are writing a definition for GDP now,
Yes, sir.
it's a very specific definition. Very specific. Because if you go to World Bank website and you want to, collect the data for the GDP of any country,
Yes, sir.
so the definition that they also provide, because they have to calculate the whole GDP, no? So on what basis, on what
Yes, sir.
grounds they measure the GDP, so that is very important. So that's why your definition should also be according to or according to the basis on what the people are gathering the data for the GDP.
Yes,
And
sir.
that is the market value
Right. Okay, that makes sense. Market value.
of all final goods and services produced in a country within a specific period of time, usually a year.
Yes, sir. Yeah.
So it's on a yearly basis. So by market value, we mean the value of the product at which it will be sold.
Okay. Yeah. Yes, sir.
That is the market value. All final goods and services means that they are ready to be consumed by the end consumer
Yes, sir.
and not the goods which will be further utilized in the secondary industry to produce anything out of it.
Exactly. Yeah.
Because that will be then the double counting of the GDP.
Exactly. Yeah.
So if you will add the cotton separately and you count it separately, then from that cotton you have made the
The
cloth,
pillow or something,
and
then you
then
come
you are
back
adding,
to.
yes. So it will they
Right.
will be double counted. So you have to avoid that. That's why they say
Exactly.
market value of all final goods and services produced in a country, and the time period is usually a year, because that
Yeah.
is how they, calculate and then compare with the other countries as well, and with your own previous data.
Okay, so market value basically they're saying only in that economy that how much that we sold for in that country, or
Yeah,
it can also be in other countries.
because it's a GDP.
Yes,
So
sir.
we will talk about when it says GDP, so domestic products, so
Okay.
domestic value,
All right, sir. Okay.
right? So we'll be
Yeah.
considering a domestic value.
All
We
right.
can convert it into dollars,
Yes,
but
sir.
keeping the same value,
Okay. Makes sense.
right?
Yeah.
Okay, now gross national income.
Okay. This is the one. Okay, from what I understood from the textbook, this is basically like um income that's being earned in your country by foreigners and then is being sent outside to other countries, and income that people from your country are earning in other countries and then sending back to your country. That's what I understood from gross national income.
Okay, I tell you what. So this is the when we talk about the gross national income, or GNP, gross national product, it can also be called the same thing.
Okay, sir.
So this is the market value of all final goods and services produced. We are also talking about services, right? So
Yeah.
regardless of where in the world this is earned. So income of all of the people in your country
Yeah.
and those who are working outside and sending money back.
Yes, sir. Yeah.
But in the same way, you will have to drop the income of those foreigners who are working in your country and they are sending money back to their home. So that you cannot add.
Yeah.
That you will have to subtract. So that's why the formula will give you a good picture that GNI or GNP
Yeah.
is equals to the GDP, right?
Yes, sir.
Plus the income from abroad that you are receiving,
Yeah.
minus the payments to abroad that
Two
you are
abroad. Yeah.
making.
Okay. Okay. Makes sense.
That is how the GNI is calculated.
Okay. So basically, market value of our final goods and services. Market value of basically goods in the country where the income is being sent, right?
Yes,
Okay.
yes.
Okay. Okay. Makes sense.
Got it?
Yes, sir.
Okay, now the third one, net national income. So this is the amount spent on replacement
Yes, sir.
of items from GNP, which is basically deducted from GNI,
Oh, so the
right?
payments to abroad, basically.
No, no, no. This is a depreciation on your assets or anything that you are, you have a property or any asset on which there is a depreciation that you have to deduct.
Okay.
So GNI minus the depreciation of that asset is going to give you the net national income,
Okay, sir. Yeah.
that how much in real terms you have after the depreciation. This usually is not, you only need to know the formulas for all of the three and a bit of the definition. That's it. Because,
Okay.
and even sometimes they do not ask to, fill in the formulas as well.
Okay, sir.
But the topic that we are going to do now, this is very important.
Yes, sir.
Methods to calculate national income, that how do you calculate it?
Yeah.
First method that we have is the expenditure method. Here what you are doing is that you are adding up spending in an economy.
Okay.
So there are three methods: the expenditure, the output, the income. You cannot use two methods at once.
Yes, sir.
Why? Let's suppose if I say that use expenditure income method together, you can't do that. Why? Because let's suppose if you ask me that's okay, in my room there is a wall that I want you to paint,
Yes,
and
sir.
I come and I paint that wall, and you give me $1,000 for that. So it's not that the in my income is 1,000, your expenditure was 1,000. So it's not $2,000 which is rotating in the economy. It's only
Right.
1,000 which is
Yes, yes,
rotating.
yes. That makes sense. Yeah, yeah, yeah.
Your expenditure is my income.
It equals
So
to
you
mine.
spent so you spent that $1,000 and I got that $1,000. So it's still the $1,000. So
Exactly.
either go for the expenditure method to calculate the GDP or the income method. You
Yeah.
understand that?
Yes, makes sense.
Okay. Now, the GDP, there are two things that you must know about is the GDP at market price. How the GDP is calculated, all the expenditures, which includes C plus
Plus
I
I
plus
plus
G.
G plus X minus N.
Yes. So C stands for,
Consumer spending.
yes, consumption.
Yeah. I
I,
stands for investment.
G,
Government spending.
right? X,
Exports. And then minus imports.
and imports. This is known as to be the GDP at market price.
Yes, sir.
Do you know what GDP at factor cost is?
I've never heard of that. So,
Okay.
so isn't this formula that you just wrote for aggregate demand as well?
Yes,
It is,
because
right?
that's yes, exactly. Because aggregate demand is basically all the consumption that you are doing, no? You're
Okay.
demanding a
Makes
good,
sense.
you're consuming it, the consumer is doing that, the investor is doing that, the government is doing that, right?
Makes
And
sense.
money
Yeah.
that you are getting from the exports and you are paying for the imports, all of it.
Yes. Yeah.
So GDP at factor cost is the GDP at market price minus indirect taxes and plus subsidies. So GDP at market price does not reflect income earned by the factors of product.
Oh, okay, okay. Right. Makes sense. Yeah.
As market price is either too high
Yeah.
due to the indirect taxes which are being put,
Yes, sir.
or they are too low because of the subsidies. So
Right.
GDP at factor cost nullify that effect by adding on the subsidies and deducting the indirect taxes to give you
Market
a
price,
real sort
basically.
of a GDP without the intervention of the government.
All right. Okay, okay, okay. Makes sense.
Okay, I don't have a space here to write the note, which is very important. Okay, I'll write it here. I'll use the space to, I guess I will be able to write it. Um, GDP at market price does not reflect income earned by factors of product as market price is either too high
Or too low.
due to
Indirect taxes
indirect tax or too low
due to subsidies.
due to subsidies.
But sir, in the market price in the formula, there is a G which stands for government spending, right? So is that not spending on subsidies and direct taxes? What is that spending then?
That's what they are saying. Na? They are nullifying this impact.
Right.
They are nullifying this impact to see the factor cost. In the
Okay.
factor cost, we are basically considering the land, labor, capital, the individuals which are doing all of it.
Right. Okay, okay.
So
Makes
the impact of the government is not basically, they do not want that. Why? Because government impact is always going to disturb the equilibrium,
exactly.
either through the indirect taxes or through the subsidies.
Yeah.
The market equilibrium is going to be disturbed by that,
Yes, sir.
right?
Yeah.
Now, the second method of calculation that we have is the income method.
Yes.
That is the flow of payments received in return for,
Good or service.
yes, goods and services. So it is calculated by adding up the income of the factors
Exactly. Yes.
like the wages and salaries, the profits,
Yes. They even rent, right?
yes,
Yes. The rent,
the
interest, the rent.
interest,
Yes. Interest.
dividends, and rents
Okay, yes.
on the land, so all of this.
Yes, sir.
And I guess one more thing I missed out. Okay, fine. This is done. Yes, wages and salaries, profits, interest, dividends, rents. Okay, the third one that we have is the output method. That
Yes,
is the simplest. So measuring the value of output produced by firms.
yes.
So avoiding double counting
Yeah,
is important. That we have
yeah.
already discussed as well.
Yes, sir.
So let's suppose, for example, I'm going to give a different example here. Hmm, let's say value of car
Yes.
sold is added to value of output, right?
Yes,
So you
sir.
have done that. Now, are you going to add the value of tires separately?
No, you should not because it's already in the car, right? Like the entire car already has
Exactly.
the tires in it, right? Yeah.
But if you produce tires and sell it separately,
Then you should. Then you
yes.
need to because it's a
So
separate product.
you see the difference between the two?
Yes. Yeah, 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 sir.
So double counting the tires, if you're doing that, that is not right.
Exactly. Yeah.
So how you can not double count? What is the way? We are going to talk about that. So to avoid double counting, number one, only calculate final value of goods.
Yes, sir.
One thing. Do not add up the values.
Yeah.
Secondly, if you want to do that, you have to add the value added at each stage. So finally, when the product is developed, so it has more value. It's not like that when you were manufacturing the car, so whatever its value was after putting in the tires, the value was same. You add the value of tires in the price of the car. That's it.
Exactly. Yes.
So adding value added concept at each stage.
At each stage. Yes.
You get that?
Yeah.
Okay, you can write this part, then we'll move forward.
Okay, so I'm done.
Done with this?
Yeah.
Okay. Now the adjustment of measures from market to basic prices. So some very small concepts, very easy concepts, not usually asked. GNP and GNI are both measured in market and basic prices. So, what's the difference? So, market price is the price charged to consumer,
Yes.
and it includes the indirect tax,
Yes. Or the subsidies.
yes, and deducts the subsidy. Because in by deducting subsidy means that deducting the rate of the price, whatever the rate is at the rate of the product. Let's suppose the price is $10. So after the subsidy provided to the producer, now the price is $8.
Oh, right. Okay, there's things like that, basically. Okay, okay.
Yes.
Okay, okay, makes
And
sense.
if you are talking about the indirect taxes, so if the actual price of the product is $10,
Yeah.
now after the tax being imposed, it is at selling at $12. That is the
Right.
market price.
Okay, okay, that makes
The
sense.
final price that the consumer will pay, right?
Yes, sir.
And the basic price is the factor cost, in which you do not add any indirect taxes or you do not deduct any subsidies without the government intervention.
Okay. Yes, sir. So this is the prices charged to consumers, which
Without government intervention.
yeah, yeah,
But
yes,
this is
without
usually, this is not the prices which are going to be charged to the consumer, because at the end, in one way or the other, the indirect taxes are going to come into effect and the subsidies are also going to come into effect.
exactly,
But we just want to have the GDP without government intervention, that what was the actual value of the product.
exactly, yes,
So to see that what quality and what value of product the people are producing in the country.
yeah, exactly,
So this equals to income paid, two factors of production.
yeah,
And here you do not consider any government intervention, because that is going to change the price
exactly,
for the better or for the worse for the consumer.
yes, sir.
Okay, you do this, then we'll talk about one another small topic, and we are done with this chapter. Fine.
Okay, sir, I'm done.
Okay, now the last concept, the gross value and the net values. Gross investment is the investment which includes investment on capital goods,
Yes,
right?
yes, sir.
And when we talk about the net investment basically deducts value of replacement
Oh, okay, 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 makes sense.
of capital goods.
Yeah, okay,
So the depreciation also comes into effect.
yes, sir.
So that value is referred to depreciation, because when you are going to replace the product, it's not like that it is going to have the same value. Its value is
Exactly.
going to fall, no? When you
Yes,
will
sir.
replace it, so
Yeah,
that you will also have to pay. So in net, what you have invested, that is how we calculate it.
yes, sir.
Okay, so we are done with this chapter. Let's just start a bit of another chapter. How
Yes,
about
sir.
that?
Yeah.
Okay, so Do you know what circular flow of income is? Because I guess this is going to be about the circular flow. Is
Yes.
it? Is
Yeah,
it?
I think it is.
Yes,
Yes.
circular flow of income. So, what is circular flow of income?
The circular flow of income basically shows the movement of income in an economy. It shows you how income moves from expenditure
Hmm.
to income and then to what was the last one? Expenditure, income, output. Yeah.
Output.
Yes. It
Right.
basically just shows the movement of income in an economy through all the stages.
Perfect. So, it shows the value of output produced in the economy
Yeah.
is equal to value of income generated,
Yes.
which is equal to
The output.
expenditure.
Oh yeah, yeah. Sorry, expenditure. Yes.
Yes, expenditure made. So output is
Equals to
equals to
spending
income.
equals to income.
Yes, is equals to expenditure. Okay, let's just do one more thing and then we'll put an end here because the next topic is about injections and withdrawal, which is an important topic that we'll do in the next class.
Yes,
So
sir.
we are going to make a circular flow in a closed economy.
Yes, sir.
Circular flow in closed economy. So this is very interesting. We have why it is not the dead center. Okay. Not like this. Okay. Let me just make it correct. Okay, this is fine. So we have okay. So if you look at this, we have two types of markets here.
Yes, sir.
One is known as to be factor market. What is a factor market?
Factor market is for the factors of production.
A market where the factors of production are traded.
Okay. Yes, sir.
And product market is a market where the goods and services are traded.
Okay.
Simple,
Yes, sir.
right?
Yeah.
We have two economic agents that we will be talking about. One is the, I'm not going to use this color, firms,
Yeah.
and we have the
House.
household.
Yes.
So household provide what to the factor market? What do they provide?
To the factor market, to the factors of
Yes.
production, like they provide the land, um, then
Mhm.
basically the raw materials, right? That's what they provide to the factor market.
Okay. They provide land, labor, capital, right? These
Yes, sir.
things. And all of this basically goes to
Yes, it's bought by the firms.
firms, the land, labor, capital.
Yes,
So when the firm gets these land, labor, and capital from the household through the factor market,
yeah,
what they do in return is that they pay for it,
yes. They
the
give
way
them
you said.
income, basically, like the rent, the interest, the
So
wages.
all of it is their cost of production. Can we
Yeah,
call it cost of production?
yes.
So that cost that they are bearing here,
Is the income for the household.
yes, in the form of the,
Rent, wages, interest.
yes. So rent, wages, interest,
Yes, sir.
right?
Yeah.
So it means that in this part, they are making an income, the household,
Yes. And for
and
firms, expenditure.
firm is doing an expenditure. You have done the circular flow in the same way as this is?
Yes, sir. Yeah.
Good. Now, when the farms will get this land labor capital, and they have paid for it as well, what
Yeah.
they are going to do with that?
They're going to use it in production of the final product.
Okay, so they are going to produce the goods and services from this.
Yes.
So they will produce the goods and services, right?
Yeah.
And these goods and services are
Will be
going
bought
to,
by the households.
yes, so household is going to receive these goods and services. So when the household will receive it, so household will pay
Pay.
in
Exactly.
return for this.
Yeah. So it's gonna be the profits basically for the firms.
So this is their expenditure on
Goods and
goods
services.
and services,
Yes. But it's income for the firms.
and this is going to be
Income
the
for the
income
in
for the
terms of
firm.
profits, basically.
Yes, income for firm. So this is the income for the firms that they receive, the
Yes.
profits.
Yes, sir.
So this is going to be, although we should write here the revenue or profit. Okay, that is much better. And here we are having
The income now on their side.
the
Sorry, the expenditure on their side.
expenditure on this side. Yes, does it make sense?
Yes, sir.
So this is pretty much clear then.
Yes, sir.
Good, good. So these are the four things which are happening here
Yes, sir.
that we can see. The income here, mostly on both the sides, where they are giving something to the factors market,
Yeah.
and the firms giving something in the product market, they are receiving the income,
Yes.
and getting something from the factor market is going to result in their
Expenditure.
expenditure on for the firms,
Yes.
because they are taking the factor the production from the factor market,
Yes.
and the household is taking the goods and services from the
Product.
product market. So that is their expenditure.
Yes, sir.
Is this clear?
Yeah.
Great.
But so where does the output part come in? I have a confusion with that. Are you just supposed to show it in both markets?
Which
Uh,
output part?
because there's output equals income equals expenditure, right? So where is that the output labeling supposed to come?
No, when you are talking about the output now, so this part is the output.
Okay, so you don't have to basically label it. Okay.
You do not have to label it, but if you have to mention it, so this basically, this all of this part is considered to be
The output,
as
yes.
the output.
Okay, okay. Makes sense.
And how it is working, I tell you one more thing. I tell you one more thing. So here, this part is basically the inputs,
Yes.
and this part is the output.
Yes, sir.
Now you get that.
Yeah.
So in the factor market, the inputs are coming in. The
Yes.
output is getting out from the
Out.
product market, in the product market, right?
Yes, sir.
So I guess this is it for today then.
Yes, sir.
Take very good care of yourself,
You too,
and we'll
sir.
meet not tomorrow.
Yeah,
We'll meet
Wednesday.
on Wednesday now, right?
Yes, sir.
Okay, so 1:30
Yes, sir.
Wednesday, 1:30 Pakistan time.
Yes,
Okay,
sir.
so that's it for today then. Take very good care of yourself. Allah
You
Hafiz.
too, sir.